Okay, very good afternoon here on the 21st of June 2019. Rishi Patel, co-founder, Master the Markets, the Elite Traders Conference and the Traders Open Day. And a warm welcome in to our market roundup for the week, which, as you will know, for those of you that are following us regularly, is a market update which we conduct at the end of the week to assess our performance and also to discuss and teach a single topic here in the market. So you can look back through our YouTube channel to see all of the videos that we've done. We've been doing this process for around 2 years now, actually, every single Friday, doing an update for the market for what has transpired by way of our performance. So let's take a look at what we have lined up for you today. We are, of course, approaching the end of the second quarter, which is June. We've had a better performance than the first quarter, which is really good to see, and we'll be doing a complete analysis and assessment. I'll do that in the first week of July. So let us go into this one just here. Let's start by looking at the live trading room performance this week. So on the money bars strategy, there's been no profit and loss this week. There have been no opportunities, so not really too much going on from that perspective. With the lift-off strategy, we are actually still in this euro-yen trade because we're retracing against our opportunity today. So we entered the lift-off opportunity actually on the close of this primary here, and we've got a target for below this swing low. And we have trailed our stop loss slowly and systematically. So from where we've got in our trailing stop loss is around about the 122.09 level, I believe, is where our trailing stop is at the moment, just tucked in behind this 20 moving average. We're expecting the price to move lower, which it has been for the last few days, but as of today you can see we have moved a little bit against where we're going to. So we'll probably lock in a small profit, that's 45 pips there, against a 64 pip upside. So we're probably going to, we've locked in at least around about 0.75% profit on that. If it goes against us, we'll bank that out. But let's see if we can get that to turn and go in our favor. We'll see what happens over the next few hours on that one. Let's go over to gold bars. 2 gold bars opportunities this week, neither of them worked out for us. So first PSWB here on Aussie Dollar, which we were triggered into on the short side and then moved against us to the upside. And first PSWB here on the pound dollar as well, same thing, took us into the trade on the stretch of this bar and then moved against us. So out for a loss on both of those for -2%. Cash in 3.0 beta on the... Let's take a quick look here. There's also come out, and I'm just going to check the journal at this time because I want to take a quick look to see if I've logged that in system. And yes, that's right. So 2 cash-in trades banked out here this week. So the Aussie dollar taking us for a 1% profit and 0.62% loss on the pound dollar. Let's look at both of those. The Aussie dollar, we shorted the market on the confirmation of this swing high here. So that moved lower. We then looked to lock in some of the profit. And then that moved against us there on the Wednesday. So you can see the price did move against us. We locked in a % profit. We were looking for a 3% upside, which we didn't get to, unfortunately. The pound dollar, again, we shorted the market on the close here. Stop was trailed and we took a small loss of 0.62% there, which could have gone for the full 1%, but we did trail the loss, the stop there, so we did get out for a smaller loss, which is ideal. So overall, minus 1.62% there on the live trading room. On the elite room today, this week, from the 17th of June till the 21st of June, we haven't had any closed trades or closed opportunities this week. We were on the euro-yen this week along with the liftoff and the cash-in trade, and the smart money opportunity on the euro-yen there did short on the close of that primary as well, high on the upside here. What we did actually for the smart money trades, we let the system take the trade, so we let that run. And on the cash, we did trail the stop a little tighter, so we got out at a decent price here. on cash. If this continues to move against us, it will mean that once again the system has beaten the cash has beaten the system, which is good because it means our exits are getting a little bit more refined. Even on the live trading room for the liftoff trade, we actually exited the market on the close of this bar just here, so we actually got a better exit than what the system is providing at the moment. If it moves against us, it will take us out on the trailing stop. We'll have locked in a better profit on euro yen cash than the system offered, which is always good. So let's continue to manage these opportunities just there. Let's go on then to the topic for the week, which is what? The topic for the week this week is around trend variations. It's a very important topic, and it's something that I've been discussing in a few of my coaching sessions as our clients are learning the cash-in strategy. So I'm working with a few of our coaching clients at the moment. We're discussing the cash-in strategy, and the two important trend variations in the cash-in strategy at this time are the variation 4 and the variation 5. So what we're finding then is happening actually is it's good to have an understanding of these variations, and I want to quickly go over them so that we have a good strong understanding of what they look like. Let's do that now. Okay, so all in all, there are 6 different variations that the market can create in terms of trend variations, and this is an actual theory that's been put together by Master the Markets, and we've put this together here in the trading team. And what we've found is that every single permutation of trend can fall under these 6 variations. And so of the 6 variations, so if we have variations 1, 2, 3, 4, 5, and 6, of these 6 variations, actually only variations 4 and 5 are the ones that we use for the cash-in strategy. So it's of course very important to know and understand what these variations look like. So I'm going to do a couple of illustrations. We're going to go with some live markets as of this time. We'll roll the charts back and we'll look at some examples of what these variation 4s and 5s look like and how you can identify them during actual market conditions. So let's look at this now. So we've got this euro yen. You can see it's in a downward trend. That's very clear to see. But how would we identify which variation it is in? So what we need to do first is we need to start from either the highest or the lowest point on the chart. So we can see immediately the lowest point on the chart is this one. But if we started from this point, we wouldn't really have enough data for analysis. So what we'll do is start from the highest point on the chart, which is here. So whenever we do this analysis or this assessment, we always start from the highest or the lowest point on the chart. It's the easiest way to start things off. So what I'll do is we'll look at that and we'll call this a high just here. Okay, and this here is a low. So that's pretty obvious. Now, why is this a high and why is this a low? Why isn't this a, let's say, a higher high? The reason for that is because this is the starting point and this is our reference point. So the first point on the chart has to form a reference point. The second point, of course, is the low, and the low also is a reference point because there's nothing previous to that. It's our first low on the chart. So if I've got these 2 reference points, from there I can call this a lower high and this one here a lower low. This 4 points here actually mark the variation 4, and if we then get another lower high, we will then look to take the cash-in strategy short, because that would be a variation 4 for us to be able to trade the cash-in strategy short. So let's take a look at what we've got. It's actually this pattern here that has actually formed. So we've got this high, we've got this low, then we've got a lower high and a lower low. So as soon as another lower high forms, if it forms, that's when we'll get involved with the cash-in opportunity, and we'll call that a variation 4. So that close of that bar, which confirms the high, would be our entry into the cash-in strategy, and we would look to take that short. And that's the reason that we shorted this euro yen here for the cash-in 3.0 strategy. So that's a variation 4 trend. Let's take a look and see if we can get another example of a variation 4 trend. Let's look at this. Look at this dollar Japanese yen. Let's zoom into this a little bit to make the bars just a touch bigger. So again, I'm going to start from the lowest or highest point on the chart. Lowest point on the chart here, highest point on the chart is here. So I'm going to start this at the top side here. So this is my high, this is my low. Consequently, this is my lower high, and then this is going to become my lower low. This, of course, then is going to be the lower high just there. So again, we have a variation form. Why is that? It's because you've got that exact pattern taking place. So you've got the high, the low, this lower high. So as soon as we've got this pattern taking place, this in essence is a variation form. We expect this low to then be broken for the continuation. Now, with this one, we couldn't take the cash in opportunity straight away because we are waiting on a PSWB retracement, which you can see actually is taking place today, just here. So this is a PSWB retracement, and we'll look to get involved short on this PSWB retracement on this dollar Japanese yen. So really what we're looking to do, the objective of this strategy is to capture the open equity in line with the trend phase. So our theory is in line with the trend phase, which is this one here, the phase one here, the phase one here, and the phase one that's now starting to take place here. Our theory is that these will be good sized moves, and will run and will create the open equity, which of course is from point of entry to maximum point reached. So we have various ways of measuring open equity, and here in the elite team we've done a lot of research into those different methods, and that's how we come up with the target setting opportunities and mechanisms that we do. So you can see that what we're really looking at is an opportunity to capture the open equity to the downside in this trend continuation move. So this of course is a variation 4, and that is the reasoning for it. Let's go over here to the Aussie dollar, and what do we have just here? So let's again start from the highest or the lowest point on the chart. This time I've got a high here, I've got a low, I've got a lower high and a lower low, but this is not quite ready to take as an opportunity short here in the market as a variation 4. It's not quite ready to take as an opportunity as variation 4 because we need to have this lower high here confirmed. When that, and if that confirms, then we'll look for a cash-in strategy short, an opportunity short to take the open equity to the downside. In the meantime, one thing that we did have here on this Aussie dollar is what we call a variation 5 opportunity. And if you look at this, we had this pattern here where you had a low. Again, I'm starting from the lowest point, or I'm starting from the earliest point that I can on this chart and the lowest point at that time. So I've got the low, or the first arrow that I can see here I'm starting with on the chart. So the low there, I've got the high, then I've got a higher low here, and then I've got a higher high. But now watch what happens. You get a break. This is an upward trend at this time. At this time, this is an upward trend. However, look what happens. You get a break of the previous swing low, and we call this a variation 1 breakout. Now, variation 1 breakouts can sometimes lead to variation 5 breakouts, and that's what's actually happened here. Because what's happened here is then you've got a lower low. So notice here you had a higher high, then you've got a lower low, and then you've got a lower high, and this is what we call a variation 5 opportunity. And this is a very important pattern, because again we'd expect, now the trend is reversed, we expect the trend to continue to that downside, and that was the reason for taking that cash-in opportunity there on the Aussie dollar to the short side, looking to capture the open equity of the Aussie dollar. We didn't get as much of a run as we would have liked, but however what we did get on the other hand, was a nice move lower, and we did capture at least 1% and took 1% off the table on that Aussie dollar just there. So that's pretty much it on these variations. Let's look at a few more charts, and we can see if we've got any other different types of variations happening. So okay, again here, let's take a look at this Euro US dollar, and again I can start from this point in the chart just here. This is one of the highest points on the chart for a while. Or we're seeing a lot of data here. Let's zoom in. Let's tidy this up a little bit. Okay, there we go. A little bit less data and a little bit easier to understand. What are we seeing here? Take a look. So we've got, this is our highest point on the chart. Here's our low. Okay, we've got a lower high and we've got a lower low. Again, we've got a lower high and we've got a lower low. Now, watch very carefully. This is quite interesting. What we've got then is just here a higher high. So this is the opposite to what we were just looking at on the Aussie dollar. A lower low followed by a higher high. This is a heads up to say we may be getting a variation 5 setup. A variation 5 setup. So again, then look, the variation 5 setup has taken place because you got a higher low just here. So actually the pattern, it looked like this. So we had this happening. Then we had a break of the downtrend to make an uptrend. Then we had a pullback here, a confirmed swing, and this is what we call a variation 5 setup. It's a trend reversal in essence. And it's a cash-in setup, but we couldn't take it yesterday because the confirmation bar was too large. We are waiting for a primary or a PSWB retracement. So let's see if we can get that into the next few days. And we'll look to get involved long on this euro dollar on the cash-in strategy. So that's the idea just there behind the trend variations. I trust that that's helped. Look forward to speaking to you all soon. Until the next time, stay disciplined, follow your trading plan, keep trading like a master. Bye for now.